All right, Bulls and Bears, my name is JJ. You're watching Bull, Boom, Bear, Bust. Back with another dose, folks. Things continue to get crazier. Now, there's a mixture of good news and bad news here today. I view all this as good news because, to me, news is good. And if the news is bad to you, you might want to just kind of rethink that, because any news is good news because it gives you information, it gives you a heads up on what's happening. So if I tell you that a bunch of people lost their jobs, that might be good to know, because if you're investing for a booming economy, but you see thousands of layoffs, that might be something good to know. All right, so let's go ahead and get into it, folks. Thousands of layoffs are happening. Jobs being drained in massive quantities, folks, with all the cuts to a lot of federal workers, a lot of government jobs basically being cut, being drained. Massive rate increases on insurance coming for Californians. If it wasn't already expensive enough here in California where I'm at, homeowners are about to get another shock, and I'm one of them. So I'm kind of bracing for that. And again, not good news, but I'm glad I know it. I'm glad I know what's coming. And I hope you are feeling the same way. So please make sure you're subscribed. Let's go ahead and get it right into it, starting right here. Tariffs have been paused for both Canada and Mexico for 30 days. So we were bracing for some sort of pricing shock with the tariffs that were going to be implemented for China, Mexico, Canada. But now it's just China, and those are 10% versus what would have been 25% tariffs against Canada and Mexico. So what happened, and this is how it was presented out of CNBC, in both cases, the pauses to the tariffs came after both countries, Canada and Mexico, agreed to take steps towards preventing people entering the country and stopping some of what the administration is saying is a lot of drug running, right, into this country, right? So I'll have to see how this plays out. And it's interesting to use tariffs for this type of enforcement against incoming inflow of certain products, if you know what I mean. The current administration said he would impose 25% tariffs on goods from Mexico and Canada, 10% on items imported from China. China was not so cooperative in this case, though. They're going to actually be retaliating. And China's going to be actually now kind of tit for tat. They're going to be putting tariffs on things that we send to China on their imports from the U.S. And the way this works out is we import a lot more from China. So you could argue that China is a lot more dependent on us than we are on them. Or you could argue the opposite. We're more dependent on them for imports. But as far as exports and making money, dollars, China's more dependent on us because we import more from them than they import more from us. Now, others will say just the opposite. Because we have to import so much stuff, we're more dependent on China. That's the side that I would take. That's the argument that I would back, is that we're more dependent on China because we need more from them. All right. And the American people, they can't stand, or probably cannot withstand, much higher prices than we're already paying. We're already seeing defaults starting to surge. We're going to talk about credit card debt here in just a couple minutes with a recent chart that just came out here. But China is hitting back, and we're going to see how this plays out here. The dollar actually got stronger with this announcement. So very interesting. Now, with these inflationary concerns now with the tariffs, the central bank is likely going to be reinforced now with their decision not to cut rates. And that's the last thing they need to do, in my opinion, is cut rates. But this is going to reinforce their decision. We have more inflationary forces coming out here. So it's going to give the central bank, again, more of an excuse not to cut rates, even though out of the administration, they want the central bank to cut rates, which is just the opposite of, again, what they should do. All right, let's move on to this, what California homeowners are about ready to feel here. State Farm, and this is just the first of, I think, what's going to be many companies, asks for an emergency 22% increase throughout California. 22%, folks. Where's the 2% inflation at in this number here? Multiply that by a lot. Citing what it calls a potentially dire situation, State Farm announced that they asked California for permission to hike rates by an average of 22%. So you might see some 30%, some 10% hikes in the wake of the LA fires. The insurer has already paid out, they're saying over $1 billion with a B, $1 billion, after receiving over 8,700 claims. All right. So this is going to be painful. And some people are saying because of the higher insurance cost, it's actually going to put downward pressure on home prices. Downward pressure because people can afford less home when they have to pay more insurance. And that's going to be part of their monthly cost, basically. And a lot of times it gets rolled into the mortgage. If you have a mortgage, the mortgage company wants you to have the insurance with the mortgage. And a lot of times here in California, it's included right in the escrow, right in your payment with the escrow. And insurance will cost more for customers in California going forward because the risk is greater in California. That's obvious. So a lot of people would say, just get out of California and you don't have to worry about it. Here's the thing, though. Investors will likely come in and buy more homes. It's already only a 50% homeownership rate here in California. Only 1 in 2 people own their homes. Investors are heavy-handed here in California. And think about it. These investors that are buying these homes, these are multi-billion-dollar companies. They're not worried about a 22% increase in their premiums because they own so many homes. They can just raise the rents across the board and collect the extra money they need to pay the higher insurance, right? And some of them may not even need insurance because they have so much money they could literally just pay cash to rebuild these homes if there was a big fire. Now, I think they do carry insurance still because they don't want to face that risk, but if it came down to it, they could probably just pay cash to rebuild their homes. That's how rich and powerful a lot of these investment companies are that come in and buy a lot of real estate, especially in California. Now, speaking of emergency price increases, let's talk about what's happening with eggs, especially here in California. Now, if you didn't know, California is the #1 state for producing food, agriculture. The #1 state. People don't realize that. But we have a climate here where you can grow a lot of food a lot during the year. I mean, some of it year round. Look what's happening, though, with the price of eggs now. It's out of ABC. Waffle House adds surcharge to menu amid the bird flu shortage. So basically there's a shortage because of all the illnesses, all the outbreaks, all the flu, all the viruses amongst the bird farms. And now they're surcharging it. So instead of changing the menu and printing up all new menus and all that, they're just going to surcharge it. Because some people were wondering, why don't they just raise the price on the menu? Well, I don't think they want to go out and print new menus, especially Waffle House with thousands of locations. So right now it's just a surcharge, kind of like a tip. Tips are not included on the menu, so you just have to factor that in to your total purchase price. The national chain, which has more than 1,900 restaurants in 25 states, said it has added a temporary 50-cent per egg surcharge to all items. So that Grand Slam breakfast, 2 eggs, going to cost you $1 more. Am I good at math or what? That one I could do without a calculator. I think we're so dependent on electronics, even simple math problems sometimes are like, you need a calculator. The U.S. Department of Agriculture predicts egg prices will rise up to another 20% this year due to the shortage. Again, a lot of it is in California where a lot of the egg farms are. I think I read a post from somebody up in Michigan that said they're paying about, I think, $4 per dozen. Does that sound about right? If you're from Michigan, please let me know if that's true. I pay really close attention to the Michigan Post because that's where I'm from, even though I'm in California now, but I grew up in Michigan. And it's interesting how things can really change from state to state. I came out here and the prices, the prices were outrageous compared to Michigan. But now, and I've said this here a few times, Michigan prices for homes and a lot of other things are where California was just about 6 or 7 years ago. Right? So California prices have now spread across the United States. Of course, California is even higher now than what it was back then. But where we were just 6 or 7 years ago, many states are seeing the median home price $350,000, $400,000. The median home price nationwide is over $400,000, which is absolutely insane. We thought that was crazy to have that here in California back in the housing bubble era, 2008, 9, 10. We saw median home price go up above $400,000, and it was ridiculous back then. But now that's the new norm nationwide. And now it's not uncommon to see homes The median price here in San Diego, I believe, was 900,000 before it might have dropped a little bit recently. But folks, the cost of living, as I said, is there's more inflationary pressures than there are deflationary pressures. What about all these firings? What about all these people being let go? Let's get into that. Is that deflationary with so many people coming out of the workforce at once, less money being spent into the economy because so many people are losing their jobs? Let's take a look at a couple things on that. 1,000 EPA workers who worked on climate stuff fired immediately, or likely to be fired immediately. The administration warns they're firing more than 1,100 EPA agency workers. So there's 1,000 right there, but there's a lot more. And I could go into all of them, but it's a lot of the 3-letter agencies that are basically being drained of jobs. So these people are going to be looking for work, I think, desperately because they're used to making a lot of money. So if you're job hunting right now, it may be a very, very difficult time. And also, a lot of the federal workers are being told to come back into the office and not work at home. When people work at home for a while, they don't want to leave it. They don't want to go back into the office. So if you're looking for a job right now, it's going to be very competitive, especially if you're looking at a work at home job. You're probably going to see hundreds of other people applying for the same job, especially work at home, because now so many people are scrambling for a work at home job. A lot of insurance companies, not so much banks, but insurance companies are pretty big on the work at home thing. And it's going to be super competitive out there. So if you're looking for a job, you might want to get your resume in tip-top shape because you're going to be facing a lot of competition. I mean, if you're looking for a job right now, please let me know what you're experiencing. But from what I'm hearing from people that I talk to, including clients, and I work in finance, so I talk to these types of things about with my customers, with my clients. They're looking for jobs and they're finding fierce competition. And I really didn't understand it when they first started talking about this. And I heard it from more people. And then I just started adding it up here and connecting the dots. It's because all these other people getting laid off and federal workers being told to work at home. So you're going to be going up against a lot of former federal workers if you're applying for a job. That's what I think, especially a work at home job. All right, let's talk about the student loan debt, folks. Thorn in a lot of people's side. Student loan forgiveness. But look at this. This is something that made me go, wow. Student loan debt swelled under the previous administration despite historic forgiveness, right? So these people are not paying off their loans. Some of them got their loans forgiven, but the loan balances are so high and people are having a difficult time making the payments that the balances are actually swelling. Plus, they're still giving out new loans. Right? The colleges would be empty if it weren't for loans. Almost empty. I mean, it's rare that somebody is going to go and pay cash for an education or pay cash for a college tuition. Some athletes get a free ride or a scholarship. Some very smart people get scholarships, but mostly it's people taking on student loans, enabling them to go to college. So what if they stop, or what if they drain the federal funding of loans of college? These colleges would collapse. They would be empty, right? Is that going to happen next? I mean, we've already seen so many crazy things happen. I wouldn't even be surprised to see that happen. But what's going to happen overall with the economy? To me, it looks deflationary, but then we have some inflationary forces as well. The labor shortage, right? We have farms out here not able to find people to pick the crops. Now, some people say, oh, Americans will do it. Americans aren't doing it. Americans, a lot of them are lazy. I mean, I'm not painting this with a broad brush, but there's a reason why Americans aren't doing this. People want to sit in an office. They want to type on a computer. They want to be glamorous, like you see on TV. The real estate, they want to be $1 million listing real estate agent, and jobs like that, glamorous job. And if you thought that it couldn't get crazier, take a look at this. The current administration could leave families hungry with potential cuts to SNAP in 2025 and beyond. That's a food program for single mothers and low-income households. So will that encourage these people that are getting this free food, encourage them to go back to work? And will these be the people that now go pick the crops and do all these jobs that they normally wouldn't have done if they would have continued to get free stuff, right? That's what I'm hearing. I'm hearing kind of both sides. I'm hearing that this is going to motivate people to go back to work and to take these jobs that they formerly would not have taken. because when you start cutting off the benefits, people get desperate. I think it's going to cause another big rise in crime. That's what I think. Again, we'll see how it plays out, right? It could go a lot of directions. It could go all in one direction, but I think it's going to be a lot of different things to look at, a lot of different directions. Inflation over here, deflation over there. It's going to be kind of pick your area to see what's actually happening, right? It's a very, very interesting time to be alive, folks. I mean, let me know what you think about all this. And the cuts, are they deflationary? So many people losing their jobs at once. We're going to see the numbers come out in March on what happened throughout February. Of course, there wasn't much happening in January because the new administration took over on the 20th. So really, you only saw 10 days worth of activity there. Not really enough to show up here in February as far as looking at the numbers. But in March, we'll look back and see a full month of this type of activity in February. And still, it's going to be a lot longer to play out. But at least starting in March, we're going to start seeing some full month numbers and see if we see any effect out of this, right? Let me know what you think about all this, please, down in comments. Everybody, thanks for being here. As always, keep stacking. Big love. Bye for now. Peace.